The dot-com bubble: rise, fall, and lessons learned. The 1990s witnessed a technological revolution that changed the way we live, work, and do business. The internet became a global phenomenon, and online businesses, known as dot-coms, were at the epicenter of an unprecedented investment frenzy. However, this bubble eventually burst, giving rise to what is known as the dot-com bubble. This article delves into the rise, fall, and lessons learned from this tumultuous era. The rise of dot-coms. By the late 1990s, the internet was a rapidly growing novelty in everyday life. The World Wide Web had become a platform for communication, commerce, and information. Companies like Amazon, eBay, and Yahoo became household names and leaders in their respective fields. The promise of the internet was irresistible: the potential to reach a global audience and generate unprecedented profits. 2. Unbridled investments. The euphoria surrounding dot-coms led to an investment frenzy. Investors, ranging from large institutional funds to individuals, rushed to buy shares of technology companies in massive quantities. The demand for shares was so high that valuations of these companies soared to exorbitant levels, often disconnected from financial fundamentals. The lack of prudence in investments was exemplified by the famous acquisition of Broadcast.com by Yahoo in 1999 for the staggering sum of $5.7 billion. At that time, Broadcast.com was not generating real profits, underscoring the irrationality that had gripped the market. Third, companies without real profits. One of the most notable features of the dot-com bubble was that many of these companies were not generating substantial profits, despite enormous investments in advertising and expansion. Companies were spending colossal amounts on marketing and acquisitions to expand their online presence, but often operated at significant losses. The promise of future growth and a global audience seemed enough to keep investors interested. A prominent example of this dynamic was Pets.com, which had an iconic puppet character in its commercials and an aggressive marketing strategy. Despite its popularity, Pets.com couldn't consistently turn a profit and ultimately filed for bankruptcy in 2000. IV. The bursting of the bubble. The dot-com bubble reached its peak in the year 2000, when the stock market experienced a massive correction. Stocks of technology companies, which had been steadily rising for years, began to plummet. Many of these companies saw their valuations drastically reduced, and some went bankrupt. The Nasdaq Composite Index, which was heavily populated with technology companies, fell over 75% from its peak in March 2000 to its low point in October 2002. Billions of dollars in market value vanished, and numerous investors and employees lost their savings and jobs. V. Lessons. Learned the dot-com bubble left behind a series of important lessons. Firstly, it reminded investors of the importance of caution and due diligence when evaluating investments. Not all technology companies were created equal, and blind trust in future growth without real profits was unsustainable. Secondly, the crisis underscored the need for companies to maintain a strong financial foundation. Those that had overspent on advertising and expansion without a clear strategy for profitability found themselves in a precarious position when the bubble burst. Xerox, the technology renaissance. Despite the initial bitterness, technology did not halt after the dot-com bubble. It emerged stronger and healthier. Many technology companies that survived the crisis learned valuable lessons about financial management and sustainability. Some of them, like Amazon and Google, became technology giants leading today's economy. The crisis also led to greater maturity in the technology market. Stricter standards for investments were established, and more attention was paid to the financial fundamentals of companies. investors became more skeptical and cautious in their investment decisions. 7. Conclusion. In hindsight, the dot-com bubble was a tumultuous period in financial and technological history. While it left scars, it also provided valuable lessons that still resonate today. Irrational exuberance and a lack of financial prudence led to an unsustainable bubble, but they also led to increased maturity and resilience in the technology industry. The dot-com bubble is a reminder that, even in times of boom, it is essential to maintain a realistic view and solid fundamentals. As we move forward into an era of continued technological innovation, remembering these lessons may be crucial in avoiding the repetition of past mistakes. Thank you so much for joining us on this journey through the dot-com bubble. If you found this video informative and enjoyed the content, we'd greatly appreciate your support. Please consider subscribing to our channel to stay updated with more engaging content like this. Don't forget to give us a thumbs up if you liked it, and we'd love to hear your thoughts in the comments section below. Your feedback and engagement mean the world to us as we continue to explore fascinating topics together. Until next time, take care and stay curious.